Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Wednesday, March 11th. Firstly to the S&P 500, and here we see a continuation of the trend to the downside today. Candle once again making a lower high and a lower low. Once again a black body candle, but the size of the black body has reduced quite dramatically compared to the previous candle. The previous candle was a very large black body, sellers in control, strongly committed, strong downside momentum, and with the size of the black body reducing, it does suggest that there's been a great reduction in the net momentum to the downside. And that loss of momentum does suggest that there is some potential for a change of trend. Now, having said that, however, we still do have the sellers in control by closing down towards the low of this candle. So that's something in favour of the sellers. But this reduction in the size of the black body certainly does cause reason for concern, combined with the strong support expected at the bottom of this highlighted zone and at the 2040 area. Now, any change of trend would need to be confirmed with a candle making a high and a higher low, and any attempted rally by the market could find resistance anyway through the zone, extending up to about the 2079 2080 area, with a couple of important areas along the way, primarily the Kijun-sen indicator trading around 2071. Now, as I've mentioned previously, some very important trading coming up. If the market is able to breach this 2040 level, we have the Ichimoku cloud just down below there, and that may provide some very strong support, but it's very thin, and the amount of support there is not as strong as if we have this scenario where we have a thick cloud. So the opportunity is there for the sellers if they are strong enough. So that makes the 2040 level very important, as does that potential change of trend to the upside. The Ichimoku cloud extends roughly from about 2033 down to about 2029, 2030. Now, in terms of the bands with the S&P, and if we do see any change of trend here, we'll be looking to the lower band at 2072 to hold as strong resistance, previously support, and if the market is able to rally, that's an area we should be watching very, very closely. We do have continued bearish activity down below that lower band, suggesting that we now have a strong bearish bias in the S&P 500. Moving next to the Euro US dollar, and here we see continued selling. We didn't see the expected small body candle that we had seen previously. For today's trading, as it has completed trading, we've seen continuation of that strong control by the sellers, that strong commitment, and the very, very strong downside momentum. A very, very bearish candle here today. The amount of net momentum has actually extended. The size of that black body is slightly larger, and it certainly wouldn't surprise that if the sellers are strong enough to test down to 104.14, then they are likely to find some strong support down there in light of these really two very extreme candles from the past two trading days. Now, any attempted retracement is likely to find strong resistance at the 107.60 level, or certainly around the Tenkan-sen indicator initially trading at 108.75. We do have a bearish market in all three timeframes, trading down below the cloud, the Kijun-sen and the Tenkan-sen, and just ignoring that small bit at the end of the Kijun-sen and Tenkan-sen, because that is including the trading that has just begun, and it's inconsequential. But prior to that, we see this very strong angle, the steep angle of both of these indicators, indicating that we have very strong downside momentum in both of those time frames, as well as if we look at the Ichimoku cloud here, pointing down fairly sharply as well, suggesting that there still is strong downside momentum in that longer term time frame. Moving next to the Aussie dollar, US dollar, and we're seeing continuation of the trend to the downside. The previous day's candle, however, was a much more bearish candle. It broke out down below the 76.72 level in a bearish manner. Sellers in control, strong commitment. Taking out this swing low here was quite important, and closing below there in a bearish manner. And it did suggest that we were likely to see continued downside, which is what we've seen today. So a candle making a lower high and a lower low. Now, the problem here for the sellers is the reduction in momentum. The size of that black body body has squeezed up a little, and it suggests that the momentum that we saw in the previous candle is no longer there in the market, even though the momentum is still to the downside. So that small change in momentum does suggest that there is potential for the buyers to come back into the market. Now, we aren't seeing any strength from the buyers. What we have seen, however, is a lack of strength from the sellers. Combined with this loss of net momentum, we've also seen the sellers lose control. So we have the market for today's trading closing around the midpoint level. So the loss of control, the reduction in momentum to the downside suggests if the buyers are strong enough, they can change the trend to the upside. Now the thing here is, however, that we're not seeing any strength from the buyers. So what we require is confirmation of that change of trend, and it would be a candle with a higher high and a higher low. The problem for the buyers is going to be that we have strong resistance extending up to about this 76-72 level, previous important support level, much longer in the past than just recently, but in the last three candles we've seen that area hold support briefly, but extending down to the swing low here of this candle, and that's exactly where we're seeing some rejection coming from on this current candle as it is developing. Now, even if the sellers do come into the market strongly and breach 76.72, we're likely to find very strong resistance around the Tenkan-sen indicator at 77.09 and then at the Kijun-sen at 77.35. If we do see continued selling coming into the market, then we don't have any strong support until the market tests down to around the 74-cent level. So if the sellers are strong enough, they could really extend this trend to the downside quite a fair way. But I think we just need to be patient and watch how this next candle develops because of this reduction in the size of the body and the loss of control by the sellers. Now the other thing to watch here is the Fibonacci retracement. It's only a very small retracement, but it's the previous first time frame uptrend, and we're comparing the current first time frame downtrend to that. And we have seen the market extending through the 100% level in a bearish manner, through the 161.8% level in a bearish manner, and now for today's trading, when we've tested just below the 261.8% level, we see upside price rejection from there with the sellers losing commitment. So that also suggests that there is potential for a change of trend to the upside, but we do require confirmation with a higher high and a higher low. Now just looking at our bands here with the Aussie dollar, US dollar, and here we saw the squeeze going on previously. We were ready for a new trending situation, and previously we saw the breakout to the upside, but we didn't see the strong follow through that gives us that confirmation. In the candles after that, we saw the upper band holding as resistance and the lower band holding as support, but 4 trading periods ago we saw the bearish breach of the lower band, and we were looking for confirmation with the bearish candle. We didn't quite see that. We saw the market testing up to the lower band and being rejected from there, with the sellers only taking weak control, and we've seen the strong confirmation with today's trading, a very bearish candle, and it does suggest that with the market trading below the band, the bottom band, that we do have a strong bearish bias in this market. And if the market does rally, we're likely to find very strong resistance coming in at the lower band, trading at 76.85, which coincides roughly with that previous level of support just above the swing highs at 76.72.